Hey guys, welcome to this month's stock market recap. I'm Robert Montes with Nexus Wealth Management. Today we're going to be going over what helped the market, what hurt the market, and your key takeaways for the month of July 2025. So first off, a recap. Every major index finished up, which is always good news. We saw the S&P 500 finish up 2.2%. We saw the Nasdaq finish up 3.7%. We saw the Dow finish up 0.1%. Now, what actually helped the market? A lot of it had to do with earnings reports. Earnings were great this past quarter. In fact, I think it was 82% of companies on the S&P 500 who have reported earnings already reported earnings that were higher than analysts predicted. So that was very positive and definitely helped bolster the market's performance. Another thing that we saw was the trade resolutions that were coming into play between us and Japan, us and the European Union, and us in the United Kingdom. All those were resolved. It took a lot of uncertainty out about what the future holds as far as trade policies, which helped settle the market down and bolster performance. We saw the Fed holding steady with rates between 4.25 and 4.5%. This just kind of signaled to investors that, hey, things are kind of plugging along in the right direction. There are still talks about the Fed lowering rates, which would definitely help as well. But it showed that there was going to be no like knee-jerk reactions anytime in the future. As far as what hurt the market, again, not so much what hurt as much as there were detractors. We did see things like inflation up. So inflation was up from 2.4% in June to 2.7% in July. That's year over year. We saw unemployment up slightly from 4.1 to 4.2%. And there are still some residual trade concerns with tariffs still getting situated. But overall, more detractors, not necessarily things that were hurting. As far as things to pay attention to, I say it every week, guys, diversification, diversification. Diversification is going to allow you to avoid any type of crazy sector risk or any regional risk. It's going to help smooth out the ride for your portfolio over time. If it makes sense with what you're trying to accomplish, definitely something you should take a look at. Another thing is consider bonds. Again, based on what your needs are, bonds are a great vehicle to help kind of take out some of the crazy highs and crazy lows just because of their consistent income. The third thing, pay attention to the fundamentals. If you haven't reviewed your plan, if you're not really paying attention or keeping a pulse on what's happening with your finances, probably a good time to check. We're almost 3/4 of the way through the year. If you are looking for a second opinion or a team that can help you do that, or maybe you're a 401k plan administrator who's benchmarking your plan, guys, we're here to help. Love to be a resource. Feel free to reach out. Thank you so much for watching. We'll catch you next week. Take care.